So today we're going to be looking at TPX analysis for this week, but unlike the previous videos, in this video we're going to look at very few currency pairs so that we can explain more about why and how we're going to be placing those trades on those currency pairs. So if you're joining us for the first time, we'd like you to hit the like button, hit the subscribe button, and also hit the notification bell so you wouldn't miss any of our content. So the first pair we're going to be looking at today is the AUDCAD, and as you can see, the support and resistance or the trading zones are pretty much already drawn on the charts already. So we're just going to look at what I'll be expecting on the AUDCAD. And if you don't understand how I drew these zones, these trading zones on the chart, you could check out our video on how to draw support and resistance, both how to draw support and resistance 1 and how to draw support and resistance 2. Now let's get on with the video. Now AUDCAD, as you can see, AUDCAD broke this structure, this eye, and since AUDCAD broke this eye, it is retesting the eye, and that is what we call a proper uptrend. A proper uptrend is when when market gives higher highs and higher lows. That is a proper uptrend. Now something like this, as you can see, price came here, retested the previous eye, broke this eye. Then it didn't, although it didn't retest the previous after breaking its eye, then it broke this eye. Then now there's a break of structure right here. Price broke this structure right here, and it has come back to retest the previous, or possibly retest the previous eye, but now it is retesting this trading zone. So on the norm, since there's a break of structure right here, I should be looking for a sell trade, but because of the fact that AUDCAD, if you move to the daily time frame, it is in an uptrend. So since AUDCAD is in an uptrend in daily time frame, this could be a false breakout. Now I can't just assume that that's a false breakout and look for buys, and now because of the way it is, I can't be looking for sales rather. So the best thing I'm going to do is that I'm going to be waiting for price to perform some certain things before I'll be taking trade to whatever buyers I see. That is, now if price decides to do something like this, if price decides to come into this zone, then do something like this, then I'll be looking for up trades. I'll be looking for bull trades. I'll be looking for buys up to this zone. Then if price decides to do something like this, all I need now is for price to break this zone to consider this a downtrend, then to consider this break of structure valid. Then I'll be looking for waiting for the retest of this zone. I'll be looking for sell trades. So that's what we have on AUDCAD. Now let us check out CADJPY, the Canadian yuan. Now as you can see, this is very obvious. Just like the AUDCAD, price was previously an uptrend. As you can see, higher highs, higher lows, higher highs, higher lows. But this is a lower high, then the structure was broke down to this low. So what will I be expecting from CADJPY? I'll be expecting CADJPY to get into this zone, then sell to this. Now it's not going to, you are not going to be able to place any reasonable trade from this forward time frame looking at the trade like this. So the best thing I'm going to do now is to jump down to the 1 hour time frame. As you can see, the trade is now actually making more sense, and I can actually wait for a proper entry raising here. So the best thing what I'll be waiting for now is for price to give me a double tops. I'll be waiting for price to give me a double tops, or I'll be waiting for price to give me a reasonable entry candle. That is an engulfing candle, a close below candle, an inverted hammer, in which if I'll be expecting a trading and entry candle, I'll have to make sure that the entry candle retests or tests this 50 EMA before I'll consider it a valid candle. Although if I'll be seeing let's say for instance, I'll be seeing an inverted hammer right here, a gravestone doji, I think. If I'll be seeing an inverted hammer right here, Since the inverted hammer is occurring in a trading zone, in a very important or in a major trading zone, that is this resistance right here, it is already valid as an entry reason. But I need more confluence in order to place the trade. This won't guarantee me winning the trade, but at least I have more percentage, I have more assurance that I'm going to win the trade. So if I'm waiting for a entry candle, a candle stick as an entry candle or as an entry reason, I will have to make sure that the candle touches this 50 EMA, then I'll sell to the downside. Now the next pair we're going to be looking at is the EURCAD, EURCAD, the Euro Canadian dollars. Oh, I don't think I plan to talk about this. So, but let's just talk about this. Now this is, as you can see, price broke this zone. This was my trading zone, and price broke this zone. And not only did price break this zone, price also broke this structure. So I'll be waiting for price to retest. Let's go down to the 1 hour time frame. As you can see, price has broken this zone, and price is currently retesting the zone that it just broke. That is, this previous support just became resistance. Now I'll be expecting price to give me a reasonable entry reason, most likely a double tops. So let's check out the EURCHF. I think they are almost the same thing. Now, the difference in the EURCHF and the EURCAD is that in the EURCHF, okay, let me go back to the EURCAD and show you guys something. If we jump to the daily time frame, you can see that, as a matter of fact, this is a double bottoms that hasn't been retested yet. That is, the daily time frame still permits the fact that this candle can still get to this zone. That is, sorry, let me draw this. The daily time frame permits the fact that this candle can still get, or these candles can still get to this zone before moving bullish. That's if it wants to continue bullish, and it can also continue bearish. But if you're checking out EURCHF, this is a double bottoms that has broken this structure and has already been retested. If you remember when we talked about one major confirmation of an uptrend, that is the 1, 2, 3 move. Now we've gotten the 1, 2 move. As you can see, we'll be expecting the 3 move to confirm that this is a break. This is a break of structure actually. So we're expecting the 3 move to confirm that this is a new trend. But since looking at this, this is the double bottoms that has broken this structure, and it has and the double bottom is now retesting the neckline. There's actually a more assurance that this is going to go bullish. So if you go down to the 4 hour time frame, you are seeing something like this. I wouldn't consider these double bottoms and say that I'm going to sell to this zone, because according to the daily time frame, this is the neckline of the double bottoms that was formed in the daily time frame, and more than likely price should continue from here upward. That is, price should continue from here to the upside. So before I'll be placing any trade on the EURCHF, if I'll be placing a sell trade, I'll be expecting price to break this zone, then retest this zone before I'll be looking for trades to the downside. And if price gives me something like this, or if price breaks this zone and retests this zone, if I see any reasonable reason, like a valid double bottoms here with a very strong hammer or a very strong engulfing candle, I might consider buying this to the upside. Sorry. Now let's look at EURGPP. Now these are EURPS. They should most likely give out the same analysis because they are correlated pairs. But although there's a little bit difference between the CHF and the EURGPP, but the rest are actually more or less the same thing. Now looking at the EURGPP, price broke this structure. Just look at it from the beginning. Price formed the double bottoms here, then broke this structure, came here, came low. Then price didn't break this high. That is, this signifies the fact that the EURGPP is still in an uptrend. What do I mean? Let's check this out again. Now, when price came from here to this zone, price made an higher low, but didn't break this lower low. Then instead, price formed in double bottoms and broke this higher low to form an higher high. Then, sorry, this lower high, not higher low, to form an higher high, then an higher low. Then price didn't break this higher high. Price didn't break the new high. Instead, it broke the higher low. So this is not a confirmed higher low. So price can continue doing something like this, and it's still going to be regarded as an uptrend until this line is broken. So until this line is broken, this price is still in an uptrend. But the fact is that since it is still in an uptrend, but it is still giving us higher lows, lower lows and lower highs, I think it is still safe to say that I'll be expecting price to get to this zone. As you can see, price to get to this zone, and I can still be looking for sell trades down to this zone. And if you can look at this carefully, you find that price is retesting this zone right here. So since price is retesting this zone right here, I can still jump down to the 1 hour time frame. This is a valid double bottoms, but this candle is too long for me to place a trade with. So I'll be expecting the like 2 or 3 red candles to come in a little bit, and I think I'll be buying to this zone right here. So that's it for the EURGPP. Now let's check out the last pair for today, and this is the EURJPY. As I've said earlier, the EUR pairs are more or less the same thing. But the difference between this EURJPY and the EURGPP is that this is not an uptrend, this is a downtrend. Now, why is this a downtrend? In the EURGPP, price broke this high to continue as an uptrend, but price didn't break this high before coming down. As you can see, this candle got to this zone here and started coming down. But if you look at the EURJPY carefully, you find that price broke this high, price got to this high, formed an higher low, then broke this high. Then after price broke that high, then it broke structure. This is a sign of a downtrend. That is, this is downtrend that is about to happen. But the fact is that this is not yet a confirmed downtrend. As I've told you in our previous video, if you want to confirm the downtrend, we are going to have to wait for the 1, 2, 3 trend reversal move. So until that has happened, we cannot confirm that this is a downtrend. But the fact is that I don't think I'll be waiting for that before I'll be looking for a sell trade here. And what's the reason? Because this zone has been broken. All I'm waiting for is for price to get into this zone and to give me a reasonable entry reason to sell to the downside. And the only entry reason I think I'll permit from this zone is the double bottoms. It's the double tops, actually. So I'll have to jump down to the 1 hour time frame, wait for price to give me a double tops before I'll sell to this downside. Because if you look at it from the 1 hour time frame, it actually looks more of a very valid breakout, a very valid break of structure. But in the 4 hour time frame, it doesn't really look like a break of structure. It looks like a false breakout because this candle is just too long, and this can just end up covering up this green candle could end up covering up the red candle to form a candle pattern. I've actually forgotten the name. So I think that's all for today. So if you enjoyed the video, please like and subscribe, And in the next video, we're going to do a review or a preview of the trades that we're going to take, or if we actually took the trades, or how the market went throughout the week. I'm very sorry for not doing the preview for last week. We actually rushed through too many pairs last week, and I don't think I'll be able to cover the whole pairs that we checked out last week and still be able to do this week's video in 20 minutes. So next week, we're going to be doing a preview of this week's video, or of the trades that we took this week, and we're going to show you trades for the next week. So see you next time.